Welcome to this webinar. My name is Linda Hellström and I'm the founder of GRC Watch. And for those who haven't met me before or haven't been in touch with our company, GRC stands for Governance, Risk and Compliance. And we work with a specific area within this field, namely due diligence, or you can also call it oversight or third-party risk assessment. And the topic for today's webinar is ESG due diligence. And when we say that, we mean the type of due diligence that institutional investors are performing on asset managers and funds. And before I present our panelists for today, I'm just going to give you a really short background on why we are focusing on ESG due diligence. We have a network with companies in the fund industry, and they perform due diligence on each other. And many of them are asset managers. And during the past year, many of the asset managers came to us and said that there has been a significant increase in the number of questions that institutional investors ask in relation to ESG due diligence. So we started collecting a lot of questionnaires from the asset managers and asking, what do you think are the key challenges in responding to these types of questionnaires? And we also went over to the other side and interviewed institutional investors to see were they really receiving the kind of answers they wanted, and in what other way could the information flow be improved? And some of the persons I spoke to and that we received feedback from are the panelists today, but we also received a lot of feedback by other members in the community, and we are truly grateful for that. So that is sort of like the background why we focus on this area. And if I'm just going to give a really short presentation about the panelists, and then I'm going to let them introduce themselves. And Louise, let's start with you. I mean, Louise, she is a senior ESG advisor, and we have also consulted her when we phrased questions to our ESG due diligence questionnaire. And she's now also part of our ESG advisory board. And in the panel, we also have Ann-Sofie Odenberg, who is head of sustainability at Brummer & Partner. And she will share a few challenges when responding to ESG due diligence when you are a hedge fund manager. And we also have Lingwei Lu from Söderberg & Partners, a Swedish wealth manager. And she is sort of like on the other side analyzing the answers from asset managers, and they have been performing a risk assessment of asset managers and funds for many years now. So she will share some light from the other side. But Louise, if we start with you, I mean, you have worked for a long time now within this space. Maybe you can just start by mentioning what you have done in the past and how you work and assist asset managers today.
So thanks, Linda, and thanks for having me on your webinar. I've spent all of my career basically in or around the financial industry. The last 12 of those focused on sustainability and ESG, 8 of which were as head of sustainability and corporate governance at East Capital, the emerging and frontier market specialist, where I designed and implemented a strategy for fully integrating ESG throughout the investment process. And the last 3 years, I've actually run my own advisory business as an independent consultant, where I assist different types of companies in the financial industries, but many asset managers as well in elevating and really strengthening the processes around responsible investment. And then I also serve on a number of boards, including some of the East Capital Lux-based funds.
Yes, a broad experience, and fantastic to have you here today. And if looking back, I mean, if you compare the kind of reports and documentation that an asset manager has to present today, can you see any differences in that kind of documentation versus documentation in other areas, and that something which has changed over the past years?
Well, first of all, it's as everyone knows, really gone from nice to have niche to must have mainstream. So basically, you cannot launch or fundraise a new product today without the really robust and well thought through ESG process. So that is, of course, the main industry change, but also the whole awareness of that in order to be able to invest in something, you really need to be on top of who you're investing with. So the burden of proof basically has increased a lot on these managers. So before, maybe 10 years ago, you had 2 or 3 questions as part of a general RFI, request for information. That grew into a section of maybe 5, 10 questions. And now today, maybe you get a dedicated ESG RFI DDQ type questionnaire comprising, I mean, up to 10 pages sometimes. And it's really about explaining not why you consider ESG, but how you integrate it and what tools you use and what governance structure you have internally to ensure that ESG is properly addressed and also properly followed up. So it's all about really confirming these different steps.
And Ann-Sofie, you're head of sustainability at Brummer & Partner. I know that you mentioned also that you have seen this shift in burden of proof and that you have to prove a lot of things to a different extent now within the ESG space. Can you mention any challenges related to that or how you have handled that in your company?
Well, I agree with Louise that a few years ago, there were maybe just a few questions relating to ESG, if there were any at all during the due diligence processes. And it has increased tremendously. And it's the level of detail and granularity that you need to explain, as Louise said, not only why, but also how you do it. That has increased a lot over, and I guess many of you who are here today are familiar with the PRI reporting framework. And a couple of years ago, they actually introduced a module designed for hedge funds. And we didn't have our own module preceding that. So there's definitely lots of information regarding ESG practices and a level of detail that we haven't seen in relation to other questions previously. So the requirement on ESG disclosures and transparency is huge, yes.
Yeah, and I know that you have also mentioned, I mean, since you have a different investment strategy and invest in a large number of financial instruments, that you think that many of the questionnaires out there, and also to some extent the PRI reporting, is not really adjusted so that you can explain everything that you do at Brummer. Can you comment or give a few examples of where you cannot shine as a hedge fund manager?
Well, there is, of course, standardization is good because it makes it easier for the end client to compare the investment products and decide which one they want to invest in given their preferences. But also with standardization, some information is lost. And as you mentioned, we are a hedge fund manager. We manage one multi-strategy fund that invests in 9 other hedge funds managed within the Brummer Group. And for example, when our multi-strategy fund, ESG DDQ, it is often from a single strategy viewpoint and also often from an equity long-only viewpoint. So first we have to, in these kind of questionnaires where there are tick the box exercises, it's sometimes very difficult to describe how the multi-strategy integrates ESG in the evaluation process and during the monitoring. But also we need to try to explain how the different single strategies do that the multi-strategy is invested in. And you mentioned hedge funds and the term or label hedge fund, basically an attempt to group together a wide variety of different investment strategies that invests in a wide variety of different financial instruments. So there's not really a one size-fits-all approach on how they integrate ESG. So it depends if it's a fundamental discretionary strategy or if it's a quantitative strategy. And there's often not enough room to try and describe how that works. So I see the purpose and I understand why there has to be standardization, but also some information.
Yes,
and it's not always easy to try and convey it to you.
Yes, and I think that a conclusion that we drew when we analyzed a lot of ESG due diligence questionnaires and understood the differences between this type of due diligence and other types of due diligence that we are working with is that you can't just use a lot of multiple choice. You really have to use a combination with a lot of free text answers as well, so that the asset manager can really tell a story with the questionnaire, so that you can tell the uniqueness with each asset manager and each fund. Linghui, I mean, you are on the other side assessing the answers in questionnaires. And just to bring in your perspective a bit here, acting as head of sustainability, and you have your risk assessment that you've had on asset managers and funds for many years now. Can you just tell us first about when you started with this scoring from an ESG perspective? Do you have a lot more funds now versus when you started, and just to get the scope of that risk assessment?
Absolutely, happy to be here. Hi everyone. So our sustainability analysis of funds started 2014, and we now cover around 3,300 funds. And these are not only ESG funds, but all the funds that are available for our clients. So it could be managers from Sweden, but also from all around the world. And we started with the analysis in 2014 to make sure that our analysis also integrate sustainability, and our advisory also integrate sustainability. And so we've seen a tremendous development within the ESG area for the fund managers and also other asset managers to work with ESG. And this is also the basis why we need to also develop our due diligence or the questionnaire that we send out. So we're constantly improving our own way of assessing and receiving information from the managers as well.
Oh, I'm really happy that you're mentioning that, because I think, I mean, you constantly have to work with due diligence questionnaires, because, I mean, it's not just that we get new regulations, it's we constantly improve the risk assessment as well. And I mean, you are very transparent in your assessment of asset managers and have a dialogue with them, and you have like core criteria that you use. Can you just mention a bit what you value the most and how you think regarding these two criteria?
Sure. So when we assess fund managers on their ESG work, we look at positive selection and responsible ownership. And a fund receives a score in each of these perspectives that is weighted equally into a total scoring. And then a fund receives a grade according to the traffic light system. So the green products we recommend, the yellow ones are working with the ESG, but probably not as active as the green one, and the red ones are the ones that we say that usually these products would just leave the world as it is and not really proactively working with ESG. To be brief about the different perspectives that we're looking at for positive selection, it would be really just our way of seeing ESG integration, but also we're looking at other aspects such as resources, education, or training for managers regarding ESG issues. And then for responsible ownership, it's not only the engagement activities, but also engagement and collaborations with others to push companies in a sustainable way.
Okay, that was a really good summary. And if you compare the answers that you received in the beginning, what kind of improvements have you seen? You mentioned that you want to see, I mean, how they integrate ESG internally and the kind of resources they have and how they use ESG data in order to make good decisions. I mean, in which areas have you seen particular improvements if you compare to 5 years ago?
Yeah, I would say the qualitative bits are a bit difficult to measure, but from a quantitative perspective, what is definitely seen is the development or the number of full-time employees, actually, to put it very concrete on ESG this field. So the number of people working with ESG within the company is growing. We receive emails from asset managers saying that, or updating us on the new number of recruits, just to make sure that we have the new information also in our assessments. So I would say the resources are definitely what is growing and developing very clearly, but also the number of engagements, how you engage with companies, and the ESG integration processes, which are a bit more difficult to just put in words exactly how. It has changed, but it has definitely developed as well.
Yeah, and I know that you look at that they are not just that they are working proactively versus their portfolio companies. And I guess, I mean, you can get a certain amount of information in a questionnaire, but then maybe you need to get some information in the meeting. So maybe that is also information that you can get in such questionnaires. And coming back to the exercise that we had, Louise, when we tried to combine all of the questions in the questionnaire. I mean, some of the sections that we added more questions to was actually the ESG resource section. So that is also something that we completely agree with. And when it comes to active ownership, I'm a bit curious also from your perspective, Ann-Sophie, because I mean, when you're trying to answer questions about being an active owner, well, you are active in a slightly different way as a hedge fund manager. And can you tell us a bit about what you do within that field and what could be challenging with that when it comes to questionnaires and reporting?
Yeah, sure, I can try. And as I mentioned previously, the questionnaires are often from a single strategy long only kind of viewpoint. And in that case, you own shares in a company and you can be an active owner and a responsible owner. But if you manage, for example, a CTA, a commodity trading advisor, and you don't invest directly into companies, you invest in future contracts, then you don't have that ownership that you can sort of use to engage. And in that way, we try to engage with index providers on how to develop ESG indices and what they should include or exclude. And we can engage with exchanges regarding including sustainability disclosures in the contracts. And also, obviously, as everyone else, we can participate in like PRI working groups or working groups within the Standards Board for Alternative Investments, in which we are a founder. So it's not always easy to answer how we engage with companies if it's an investment strategy that doesn't invest directly in companies. But there are other ways that we can try to be responsible investors.
You're acting in relation to other actors in the industry. I think that was a really good example of that. And Ling-Wei, coming back to, I mean, in your criteria, I think I read that, I mean, you're looking a lot at how they use the ESG data and how they come to the conclusion if a company is weak or strong from an ESG perspective. To what extent is it important what type of data they use or the choice of data suppliers supplier? Is it mostly like the process of how they use the data and that you can see that they have a thorough process for that? Or is it also very important the type of data?
Yes, you're absolutely correct. So we do not put our own assessment of what kind of data you should use. We look at whether you have the resources to actually interpret the data in a adequate way, because we know that you have MSCI and some of the bigger external suppliers of ESG data, but the data, to really make value out of the data, you also need your own approach to view the data to make sense and have your own strategy. So we're actually not putting emphasis on you should have data supplier X, Y, and Z, but rather on how are you processing that data and integrating it into your own decision making to bring more value actually to the clients.
Okay, yeah, and coming back to you, Louise, I mean, we have been looking at many different questions that we thought were missing in the questionnaire, and maybe that could add a value. But if looking at the role that you have when you advise asset managers today, and when you come in and you are asked to help them strengthen their ESG integration and maybe help them describe that in due diligence questionnaires and PRI reports, etc. What are the most common things that you do when you help them, and like easy improvements? I mean, of course it should be real ESG integration, but if you can comment or give any tips about ways to improve.
Well, I think it comes back to what Ling Yi just said about explaining how ESG influences the everyday work of the managers. And that comes back to whatever product you are managing. So depending on geographical allocation, types of assets, as Ann-Sofie was also discussing the differences that asset classes actually imply on your everyday ESG work, but that you have a logical and rational and understandable process for integrating and assessing ESG in every step of the investment process, basically from identifying your, or defining your investment universe all the way through to, portfolio construction and ownership once you have invested. And I guess that's maybe the most difficult question, or maybe, first of all, the most interesting question to clients is what Ling Yi just said, was, how does it actually impact your everyday management and investment decisions? That is also probably the most difficult question for asset managers to answer on older structures and products where it maybe wasn't structured around an ESG integrated decision to start with, but it has evolved over time. So this will probably be easier in new products going forward, where this is really structured from the beginning, where when you're designing your investment product, what objectives does it have? What tools and resources can we apply to it? And how will we actually execute it in the everyday work? So basically, it's very difficult to pretend you're something that you're not, obviously. And I guess all these questionnaires, really aim to call out those who are greenwashing or overextending their promise in terms of ESG delivery. But going back to what you do in your everyday work as an investment manager should really be the starting point also of your ESG work and story. I mean, it's very difficult to prove otherwise unless you're really firmly also structured. So it's really a lot about, what's the purpose of this product? How do you invest? What is your definition of a good company? All these ESG things are really inherent in most investment decisions today by most investment managers in one or another way, but not everyone still calls it ESG. So it's basically about, identifying, isolating that, strengthening the process, being able to describe that, but also the whole follow-up work, which is going back to this burden of proof. I mean, asset managers rarely need to prove that they've checked Bloomberg or read the annual report, but in the questionnaires we see today, and also in the in the different evaluation processes that asset managers are exposed to, it's very, very detailed information. And what sources have you bought? What have you done? How did you use that information? So this will hopefully ease off a bit in the future when this is maybe through the help of EU regulations such as the SFRD and other upcoming initiatives for more financial or sustainable financial markets. But until then, standardization could possibly help with some of the sort of general questions, which I guess we saw, as you did with the regular GRC questionnaires as well, or the original GRC questionnaires, that 50 to 60% of the questions are very similar or exactly the same between these questionnaires. And if an asset manager can fill those in, once and maybe not so often, and then focus on the more qualitative examples and the storytelling you mentioned to the extent possible, and as and when they develop as in their ESG work, I think maybe that will actually help contribute.
Yeah, and I completely agree. I mean, we have never believed in 100% standardization. I think it's about if we cooperate in the community and if we get all kinds of feedback and working groups working on it, I mean, we can raise the level of mutual questions, but we will always have the unique questions at the top. But I'm a bit curious regarding like the burden of proof. Do you think that we will see more requests in the future that asset managers will have to ask a third party to verify certain things in the reports, that it will be taken even further? Or do you think, I mean, my understanding when we spoke about this earlier was that none of you have really seen this as a like common practice yet, but do you think that that will be like mandatory in the future?
I think it will be a number of factors playing into that. I mean, PRI already ask you if you have some sort of external verification. I don't think it's still not very widely spread. If we get to a point where SFDR,
it's hard to say.
Exactly, the periodic disclosures coming out of that next year, where we see that not really contributing to the transparency or the dependability that was the aim of this project. Possibly, I mean, in the future, we could get to the point where asset managers who really want to showcase their work or want to stand out will start adding extra tools and extra safeguards again as a way of being extra sustainable. But of course, it helps when you have thousands and thousands of funds, and everyone now basically has some sort of ESG work being done. People investing in those funds prefer to be certain or assured that things are done properly. But also the involvement of all these different ESG labels, and we'll have the EU label coming out, at some point as well. And maybe that will be the way to go for individual fund products, that you also have that type of.
And if tying back a bit to what Ling said as well, I mean, when they analyze whether a company has enough dedicated ESG resources, I'm just a bit curious, and maybe this is because I've worked on the inside and been in the boardroom as well. I mean, you are a board member now. It's so easy to say that, yes, we report to the board and we discuss ESG at a board level, but how does that actually work in practice? And how, I mean, what do you add in the boardroom, and how should it be discussed? Because most of the questions in the questionnaire is really about how you work with ESG on a day-to-day basis, and the board should not be involved in the work on a day-to-day basis. But I'm just a bit curious if you have seen any changes in the boards that you are working with. Have they found a way to pick up ESG issues in a natural way, or is it just like something you tick on the agenda?
No, definitely, it's not the tick on the agenda, and it's now definitely seen as part of the business operations and the products you offer. And one section that I typically advise asset managers to include in the board report is this type of like client request or evolving trends type of section, where the board can stay attuned to to things going on, and there's very specific requests coming into the company on different ESG matters as a part of also keeping them up to speed and educating them continuously over time. And when you start to see those patterns, and now we've seen the 10th SFDR request here, maybe it's time we start to to really focus on this topic. Then of course also the board is naturally engaging on those where they see that there's a huge demand or a potential mandate, or a search for a specific ESG fund for a specific geography that we potentially could deliver. We couldn't do it now, but let's aim for that in the future. So it really becomes part of the overall story, and just in terms of measured minutes, of course that's increased significantly as well, and not just to live up to regulation and sort of standard industry requirements, but I think a well composed board nowadays will really want to understand how this is adding to their business and AUM over time.
That's a really good point. And I mean, Ann-Sofie, if going back to you, I mean, if you could see, you have mentioned several challenges from a hedge fund manager point of view, but if you could see, or do you have any ideas about what you would like to see in questionnaires that you haven't seen before? You mentioned, I think that was interesting, you mentioned that you are doing a lot in order to be an active owner, but you are acting in relation to other types of intermediaries in the industry. But do you have any other ideas about improvements that would be useful for you as a hedge fund manager?
Well, it is what you touched upon earlier, the ability to try, or the ability to describe your investment strategy and how ESG fits with that investment strategy. And there it is a trade-off, as we said, between standardization and loss of information. But in particular, also hedge funds have the ability to short companies, and that is not always easy to describe in a questionnaire with tick the box questions, which are often surrounded, like in the Swedish words välja in, like selection process, what you exclude through negative screening and exclusions, and your active ownership. The like standardized questionnaires don't often have any questions relating to why and how you decide to short the two. Because if you short a company, that can be because you don't believe in their business model, or because you think that there are poor governance in place. And that is a tool which is not often easy to describe in standardized questionnaires.
Yeah, and I think that points out the need to really, I mean, even if using multiple choice in the ESG due diligence questionnaire, it's even more important to combine it with free text answers. And also, I mean, to have the introduction and really understand the investment strategy in the beginning, so that you can see the rest of the information in the light of the investment strategy. And Linghui, when analyzing all of the answers, you mentioned that you have seen improvements over the year. Do you have any comments on any type of information that you think would be good to have more of in questionnaires? I guess, I mean, you always meet with the asset managers and have a dialogue with them as well, and you have a possibility of asking additional questions, but any tips on what they could describe in more detail in the questionnaires?
Well, I think related to what Ann-Sofie said about ESG integration, of course, the Swedish word välja in, or positive selection, or to translate välja in, that would be to select in, but you also opt out when you select in. So that is always, this balance of how do you actually want to capture ESG integration. That is the better word to place. And that is also the number one question that is usually required to have more free text answers to, and not tick the box practice, because you cannot explain how do you integrate ESG in your investment strategy with just ticking the box. It's difficult to have an exhausting list of how you can do this. We've tried, believe me, it's not working, and also we limit our answers to I think it's around 500 words, and that is usually not enough for asset managers, which is why we want to meet up with them to discuss the ESG processes even more. And I think what is interesting to see more of in the answers is not only the answers of what data are you using and how is it weighted in different analysis, but also the storyline, so the thought process behind it. So giving more examples of, okay, for example, company X is in this portfolio because of its sustainability profile, and maybe this company X has some sustainability issues, but how are we working with this company to improve on these issues, to give the whole story of what are you thinking around this investment, how do you capture both the sustainability profile, but also to work to improve it, because then you get not only ESG integration, but you also have the thought around engagement as well.
Oh, that was a fantastic example. And I mean, providing more examples is good. And I also want to say that from our perspective, when creating questionnaires, my experience after 5 years of doing that is that it's a science in itself to create a due diligence questionnaire. And the more you think about the questions, the more crazy you get, because you really start thinking about every single word in the question. And one thing which I have found interesting with questionnaires is that many seems to think that it's either or, that if you can't get all of the answers in a questionnaire, then you have to use your own unique questionnaire. I think it's all about using a mutual questionnaire and getting access to examples of questions that other peers in the industry are asking, because I truly believe in that. And one thing which has been kind of interesting in our interviews with asset managers and institutional investors is really when they ask a certain question in a questionnaire, we usually ask them, okay, so this question is considered important, so why do you ask this question? And do you normally get a good answer on this? And what do you do with the answer? And it's not always that the purpose is really clear. And maybe in many cases we have received the answer, oh, we hardly ever receive a good answer, or it's very different from one company to another. And maybe that is the purpose in certain questions, because that is your chance of reading between the lines if they are really good at ESG integration. But we have really understood the value of phrasing the questions in a perfect way. And that's why it's been tremendously helpful to have you, Louise. It's been fantastic to get your help. And I think that, I mean, because it's also a lot about using the right terms so that the counterparty really understands each word in the question. And I think that one of the challenges we have is that we don't have enough definitions of everything. But it was really, I mean, rewarding to discuss this with all of you. And I have received a question before the webinar that I'm going to run. Ling, will you in any way adjust your point system or classification to SFDR?
Yes, talking about developing and also taking in the new development in the area, absolutely. SFDR is an important framework, and also going back to the audit, the third party viewing the answers, I think SFDR will be such a framework that will let the authorities in the EU to actually see what are the managers reporting on, and also to give at least some of the managers who are, reporting according to Article 8 and 9 to have that third-party verification, maybe not in the first year, but when the framework has been rolling for some years, that will be the third party viewing it. And we will take in this framework in our assessment, and I'm afraid I can't share more on how we're going to do this.
Oh, okay. And one of the questions we received beforehand was, do you think that questionnaires should contain more information about the type of ESG data that asset managers are using, e.g. the choice of data supplier and the process for evaluation and selecting a supplier? Louise, since you have been working with many asset managers, is this an area that asset managers are struggling with? Considering the challenges related to ESG data, and do you think that should be explained in more detail in due diligence questionnaires, or is it more like the process, how you use the data?
I mean, it's a bit of an unfair question depending on which asset manager you're talking to, because obviously ESG data, lack of ESG data is a problem for everyone. Big asset managers with the larger resources and larger teams can of course source maybe more of these external databases. That's one way of solving it, or put in place, teams, producing their own proprietary data, while smaller asset managers with more limited teams, less AUM, have difficulty maybe investing in these types of external databases. And there's also, as you all are aware, also widespread discussion on the different types of data, external databases. How should you apply that? Is it possible to have like a binary approach to ESG scores in an investment fund, and does that make it a better fund or not? So yes, it's interesting information as such, but I think certified partners, also assessed in their questionnaire, it's not exactly which data provider you use, or that you have at least 2 external databases. And I think that's fair to say. It should be not unjustly hitting smaller asset managers negatively. But of course, data is a huge issue, and hopefully now with the updated non-financial reporting rules coming out for listed companies, and expanding the expectations on listed companies, and getting the information out in the general space, and you see the one likes of Bloomberg and everyone else adding data, and more companies reporting. The taxonomy will continue to also expand the data available out there from certain perspectives. So hopefully in 10, 20 years time, data won't be the main issue, but rather, really, again, making sure that it helps you make better investment decisions. And I think PMs in general now understand that ESG factors can have a financially material impact on their investments. They should want to source this type of information either, through some sort of source which they can collaborate with, external database or proprietary analysis. It goes back to the way their investment style and the way they select investments, and consider other matters when making investment decisions.
So more about the process. And actually regarding the ESG data, in the next webinar that we will have on February 24th, we will actually highlight the challenges with ESG ratings, but also, the process of collecting and how to use the ESG data in the right way. So that is a topic, it's a challenge for everybody that we now have strict regulations, and then we'll just have to adapt to it. But it's not the first time that we have strict regulations in finance, and I'm sure that over time we will find a way to comply with all of these rules. So I'm very happy that I could have you in this panel. I think it was a great discussion, and we will for sure continue our discussion about improvements of the questionnaires and the due diligence process. So I hope to hear from you soon again, and to everybody who attended. Next week on February 24th, we have the next webinar. So you can check it out. We publish news about it on LinkedIn. And we also have a special event page on our webpage where you can find information about our upcoming webinars. So thanks a lot for today and see you soon.